Hello everyone, welcome to ACE Online and welcome to the quick revision session of Indian economy for RRB JE CBT-1, right. So, I hope my voice as well as video is clear. Yeah, so let us quickly revise the things, like there are around 6 to 8 topics from Indian economy which there is a possible questions, right. So, let me briefly discuss which are all important topics first, right. Then we will also see the various questions from different topics, right. Apart from this static part, there are also very important part of Indian economy, that is of current affairs, right. So, we have a schemes, we have a policies of government of India which is from Indian economy. So, most of the questions will be tilted towards current affairs, right. So, you need to take care of that and we will be having the current affairs session as well, right. But here there will be 1 or 2 questions from Indian economy which is a static in nature, right. So, let me briefly discuss what are all the important topics before solving the MCQs, right. First topic that is national income accounting. National income accounting, right. So, this is important chapter, possible question, GDP calculation and all, we will see this briefly as well. Then next topic is about budget. Budget in the sense that there is a static concept of budget and taxation as well, budget and taxation, right. So, in budget we have revenue component, capital component, different 4 components of the budget, and then within that 4 components we have different components, right. Then we have a taxation, direct tax, indirect tax, GST, right. So, all these things, there is a one mandatory question you can see from this particular topic. Then we have inflation chapter, right, possible question. Then monetary policy, that is RBI, right, monetary policies and banking sector as well. So, we have a banking sector, different banks, so all those things are also important, right. So, beyond that we have planning, very important chapter, 5-year plans, various 5-year plans, the 12 5-year plans and the NITI Aayog planning commission. So, this is also a frequently asked topic from various examination. Then we have railways related economy, specifically because you are writing the railway examination. So, recent statistics, some questions may be possible, right. So, beyond this, like we can see World Trade Organization, World Bank, right, IMF, fine. So, these will be the topics from where static questions can come. Beyond this, there will be also current affairs questions that you need to take care from the current affairs part, right, like schemes, as I said, various economical schemes, agriculture sector, then we have policies as well, government policies. So, all these topics becomes important for us, right. So, we will be solving the MCQs from this particular topics, and then we will see various MCQs through revision as well. Our intention is not to make you just solve the MCQ, but also you need to take care of the revision as well, right. So, this we will see now. Let us start with the first question. If you are active, that means like it also gives us to give more efforts. So, try to answer even if you are not exactly aware about it, right. First question, a closed economy is an economy in which. So, which one is called as the closed economy? First one, the money supply is fully controlled. That means they are saying the money supply in the market will be controlled by the government or RBI, they are saying, right. Deficit financing takes place. That means whenever there is a less amount of money for the government, that will be supported with the RBI, right, RBI will give money. So, they are saying the deficit financing will takes place. Only exports takes place. That means the goods from India to other countries will be allowed, right. But we will not allow the goods of other countries to enter into India, and here neither exports or imports takes place. We will not allow our goods to enter into other markets, and we will not allow other goods of different countries to enter into India. So, what is the answer? A very good evening, Parnita, Sai Charan. Yes, very good, Sai Charan has already answered. A closed economy means we are closing the borders, we are not allowing the goods to trade, right. So we are not allowing the troops to goods to enter into India, and also we are not allowing our goods to go out of the country, right. So that is called as the closed economy. So here neither exports or imports takes place. Yes, very good evening Venkat, welcome to the session. So answer is D, right. So Sai Charan has answered. Very simple question, but yes, there is a possible question. Let quickly revise the other type of economies. Market economy, that is private players has a more role, Adanis, Ambanis, corporate sector has a major role. Then non-market economy, that means government role is higher. Here government itself will do lot of business. If you have seen some 1991 before, government itself is doing lot of business, lot of PSUs were there, that is called as non-market economy. And mixed economy means both private as well as the public, I mean the government sector will have a harmonious role, both will have a equal, almost equal role. Then we have sectors of economy. First, that is primary sector. Primary sector means any economic sector that is involved directly collection of resources from earth. For example, agriculture, we are directly collecting resources, wheat, rice, all those things directly from the earth. Mining as well, we are directly collecting the resources from earth. Fisheries, forestry, right. So all these which are directly involves collecting the resources from the earth directly are part of primary sector, right. Then secondary sector, processing of the primary sector raw material. Whatever the directly collected material from primary sector, we are processing it. Wheat converting into bread, so this is called as secondary sector. Or cotton converting into the textile, so that is also secondary sector. Any processing of raw material which is collected from primary sector is called as a secondary sector, right. Then we have tertiary sector, which involves service sector. There is no physical goods, rather it is a service, IT, communication, etc. Then quaternary sector, these two are confusing, a little bit more focus can be given to these two, right. Quaternary sector means any economic activity related to the knowledge, education, research and development. They also develop lot of economy, right. For example, any new invention by the ISRO through knowledge, so that can also give lot of satellite development and all. So any knowledge based activities are involved, that is part of quaternary sector. And quinary sector, quinary sector means whose economic activity involves the highest decision making, cabinet minister, ISRO chairman, so they have power to take the decisions, those falls under the quinary sector, right. So these are all possible question also many times been asked in railway examination. So this is a quick revision for you. Next one, this is a typical one, let us see who can answer this, right. Other things remain unchanged, so do not consider any other factors. They are saying do not consider other factors, you consider only given 4 cases, and out of these 4 cases market demand for a good might increase. So in which instances the demand for any good, any demand for this particular good will increase. So they have given 4 conditions and they are saying in which 4 cases there is one case where the demand for good might increase, right, that you have to choose. Price of its substitute. Let me discuss substitute and complementary goods. Substitute goods means those goods which can be consumed alternatively. There are 2 options, A and B, let us say coffee and tea, right. So if your price of coffee increases, then you will shift to the tea. If tea price increases, you will shift to coffee. So they are alternate, if you can't consume one, you can go to the other one. And then there are complementary goods which can be consumed together. They can mandatorily consumed together, like mobile phone and charger, or mobile phone SIM card, TV, remote, all these things you can consume only together. If there is no remote, no necessary, I mean we cannot use the TV, right. So they are together used. So those are called as complementary goods and these are called as a substitute goods. So now let us see this price of its substitute increases. That means there are 2 goods, the price of this good has increased. So demand for this will increase, they are saying, right. So if alternate good price increases, then demand of this particular good increases, they are saying. Price of its complementary increasing. So if this good price increases, then your demand for this will increase, they are saying, right. So whenever there is an increase of this good, the demand for this good is increasing, they are saying, right. Then let's solve these two of this case B we will solve. These two are consumed together, you cannot consume these two individually. So if this price of this good increases, this price also this demand will decrease. Why? Because this price has increased. This A and B, let's say TV and remote, remote prices has increased, so you will consume less of TV because you have to consume together. So this can be discarded, right. The demand will not increase with the increase in price. Then the good is an inferior good and income of the consumer increases. The good is cheap good like 100 rupees t-shirt and your income has increased. Do you consume that? No, you won't. You will go for the branded ones. So this is also wrong. If a good is inferior and if your income is increasing, you won't demand for it. You will go for the rich good, the luxury good, right. So quality good. This is also wrong. It price increases. Whenever the price increases of any particular good, you will consume less. That is law of demand and supply. You want to spend only less amount. So when price increases, it won't increase the demand, right. Then we have price of its substitute increase. So there are two options, and when there is a price of its substitute increases, as this price has increased, you will go to shift to the good A. So this is a correct answer. Price of its substitute increases. So whenever substitute good price increases, you will go for the alternative one. So that's why the demand for this will increase, right. So very good, Sai Charan, answer is A. Next question, the national income of a country for a given period is equal to. So they are asking that what is the national income of a country. Basically they are asking the definition of national income. First one, total value of goods and services produced by the nationals. They are saying that Indian citizens, whatever the goods and services produced by Indian nationals, that is the national income they are saying. Next, sum of total consumption and investment expenditure. So they are saying that total consumption and investment expenditure. What about government? So there are three methods of GDP calculation you might have covered from economics: expenditure method, production method and income method. So here they are pointing out to the expenditure method, consumption and investment expenditure they are saying. What about government expenditure, right? Imports, exports. So this is, you can say, take wrong. Sum of personal income of all individuals. So this is, they are pointing all the income of all individuals they are saying, right, all individuals. What about the corporate entities? All those also contribute for GDP. So this is also wrong. Money value of final goods and services produced. So these two options seems to be a little bit confusing, right. So here in expenditure method, government, imports, exports all are there. So you can discard this is also, they have excluded corporate entities and all. Now between these two, national income means nothing but GDP. This basic definition you have to be aware about. National income means GDP, total value of goods and services produced in the country. That is option D. Why not option A? Because GDP is including the foreign nationals, whoever do business, Apple, Microsoft, they do business in India, and whatever the production they have contributed, that is also part of our GDP. Here they are saying only nationals, that means citizens. So this is also wrong. Hence answer is D. Fine. So that is a question. So very simple question, next one. Which of the following is another name for the average income of a country? So this is the easy one, you have to answer. Which of the following is another name for the average income of the country? Inflation rate, disposable income, per capita income, none of the above. So what is the answer? Average income of the country. See, average income of the country means all the income of a country, complete all the country income divided by all the individuals individuals. So that gives the per capita income. Per capita means per person, right. Rakesh has answered this correct. So average income of the country means the income of all the individuals divided by the individual numbers, say 140 crore of population in India. So that gives the per capita income, right. So very easy question. Next, the first budget of independent India was presented by. So after independence, who presented the first budget, they are asking, very factual in nature. Who presented the first budget of independent India? R.K. Shanmugam Chetty, Morarji Desai, Jawaharlal Nehru, James Wilson. What is the answer? So this is a little tricky one, little factual one, that is R.K. Shanmugam Chetty. So he is the one who presented the first budget after independence. 1947 we got independence, after that he was the one first to propose the budget, right. So let us briefly see the history of the budget quickly. The first budget during Britishers, because we were under Britishers until 1947, so during Britishers first budget was introduced on 7th April 1860 by the Britishers. They have presented our budget in the London, not in India, right. Anyway, first Indian budget, that means in India for the first time, they have presented the budget in 1869 and it was presented by James Wilson, right. So I am discussing about the evolution of the budget. First budget of independent India in 1947, November 26 when we got the independence. So this was the first budget and that was presented by R.K. Shanmugam Chetty. So this was the question that we were discussing about, right. Then first budget of Republic of India, that means after our constitution came into the act. So first budget was presented by John Mathai, very factual one, right. Next, Mr. Deshmukh, he is the first Indian governor, RBI governor, right. Currently we have Shaktikant Das. So first RBI governor was Mr. Deshmukh and he is also the finance minister that time. He is both RBI governor as well as finance minister. He present the interim budget. So that means election year, whatever budget they are presenting, right, during the election year. This year elections were there and it was presented just for 2-3 months. So that was interim budget and this was 1951 to 52. This budget was presented by the Mr. Deshmukh, right. Next, Morarji Desai has presented the most number of budgets as a finance minister, right. So 10 times. Not Nirmala Sitharaman, you may confuse in the exam. Actually Morarji Desai presented 10 times as a finance minister. So this may be also asked in the exam. Sai Charan, I hope it is clear. He is the finance minister that time, right. He was the one first presented the independent budget. Next, also we were having a same single budget until 1924. There was a single budget, railway budget was not separated, but British government has appointed Ackworth committee, railways. So this is very important for you as you are writing the railway examination, this will be asked in the exam, right. So government has appointed, British government has appointed Ackworth committee to know or to study the railway budget and is there any need to put the separate railway budget. They have asked him and he studied all the things and he felt that there is a huge amount of budget that is being contributed for railways, because railways has played a very crucial role during Britishers. That's why he has recommended the separate Indian budget. In his Ackworth report, he has suggested that let's separate railway budget from the normal budget, right. So this was called as the Ackworth report and this was submitted in 1921. Finally from 1924, first separate railway budget was presented. Very important fact for you. First separate railway budget was presented in year 1924 and again in 2016 Bibek Debroy, he is an economic expert, recently he has expired, right. So separate government has appointed Bibek Debrai committee and asked whether we should require a separate railway budget or not. And he has studied it. He studied about the railway budget and he concluded that there is no requirement of a separate railway budget. We have already, very less amount of money is being contributed and it has been politicized. So that's why let's merge the railway budget back to the normal budget. From 2017-18 onwards, we are having a single budget again, right? So this is the discussion on evolution of budget. There is a possible question because this is a railway budget and all, fine. Next question. The first railway budget, now tell me, we have just discussed, you have to answer this. The first railway budget was presented in, this is a previous question only, like in railways they have already asked this question. What is the answer for this? First railway budget was presented. So we have seen this was presented in 1924 after Ackworth committee recommendation. Yes, Venkat, he has died recently, unfortunately. Yes, answer is B. Next question, corporate tax is a government expenditure, companies profit, revenue for the government, capital received of the government. So what is this? What is corporate tax? Answer this. Let's see. Corporate tax means tax paid by the companies, private companies, TCS, Infosys, tax paid by the companies to the government on their profit earned, right. So corporate tax is the tax paid by the companies to the government for their profits, right. So here let us see, they have confused, this is also one of the previous questions. It is not a government expenditure, this is a tax paid by the companies. Companies profit, no, corporate tax is not a company's profit, it is a tax collected by the government from the companies. So it is a revenue for the government, it is a income for the government, not the private company's profit. It is a tax, is a income earned, revenue generated by government from the companies. So answer is C. To confuse, they have given this companies, profit criteria they have given, right. A very good evening, Mahalakshmi. I hope now this is clear. It is not the company's profit, rather it is a tax collected by the government. That's how the questions can be asked very simply. And if you see the government budget components, you must have completed budget, right. Government budget has receipts and expenditure, like government will have the money, receiving money, and then expenditure. There are two components, and within receipts we are having revenue receipts, that means one way payments, government need not to pay back to them, right. It is tax, right, fees, fines, all those are money collected by the government, no need to pay back to anyone. Capital receipts means those money received by government in terms of loans, right, debt, so which need to pay back. Then we have expenditure, revenue expenditure, that means salaries, one way payments given to someone else like subsidies and all. And capital expenditure means now government is spending money but they will get the returns like road construction and all, so they will collect taxes regularly. So these are the four components, go through them, this is a very important topic, right. So yes, this is C. Let's move to the next question. Which of the following is a direct tax? So they have given four options and they are asking which one is the direct tax. Goods and service tax, custom duty, capital gain tax, service tax. So tell me which one is the direct tax. Let me discuss what actually is the direct tax and indirect tax. This is individual or companies who directly pay to the government. So there are no intermediaries in between, nobody is there to collect your tax. It is you are directly collecting to the government, I mean you are directly giving to the government. And indirect taxes means you are not directly paying to the government, someone else is there to collect. For example, GST you take, are you paying directly to the government for GST? No, you are paying to the shopkeeper, and shopkeeper in turn is paying to the government, right? So if there is someone else who is collecting tax from you and then that is going back to the government, then that is a indirect tax. If you are directly paying to the government, then it is a direct tax, right? So income tax, you can see here direct taxes, income tax, capital gains tax, security transaction. So let us see the answer, we will discuss some important direct and indirect tax. You can expect a question from this area. Goods and service tax, it is a indirect tax, you are not directly paying to the government. Custom duty means taxes on imports and exports of goods. If someone is importing iPhones, then they have to pay. You are not directly paying to the government, someone else who is taking or selling the good to you, iPhone, they are paying to the government, you are paying to the intermediary. So this is also not correct. Service tax also you are not directly paying to the government, whoever has given services you are paying to them and they are in turn paying to the government. But see, capital gain tax. Capital gain tax means if you are having an asset, I have bought the land this year, right, with the cost of 10 lakh rupees. Next year, because of market demand, the land cost has increased from 10 lakhs to 1 crore. So I have gained 90 lakhs in this process. The land price has increased. So that gain I have bought due to market condition, the capital gain tax, capital gains. So 90 lakhs is the one which is called as a capital that I gained, and that 90 lakhs also will be taxed by the government. I have bought for 10 lakhs only, but now it is valued at 1 crore. So 90 lakhs is the capital that I gained. So I have to pay to the government. So this is a direct tax. Yes, Venkat, you are correct. So capital gains tax is a direct tax. You can see some other examples as well. Income tax, anyone who is earning income, they will directly pay to the government. Capital gains tax, we have just seen. Security transaction tax, that means if you have bought some bond or security in the stock market and the value has increased drastically from 1 lakh to 10 lakh, you have to pay directly to the government also, the gain, security transaction. When you are selling it off, you have to pay for it, right, because you have gained extra as the market has increased. Then prerequisite, that means any tax which need to pay before starting the business, that is also you directly pay to the government. Corporate tax, profit of the companies. And indirect taxes are sales tax, service tax, custom duty, excise duty on goods, any good if produced or sold. So those also you need to pay tax, but you won't directly pay to the government. And value added tax, VAT tax, now these are all not there, anyway GST was subsumed. So these are direct and indirect, try to remember, and there may be a possible question from this area. Next one, which of the following is one of the maturity periods of treasury bills, T-bills? Most popular question in most of the exams. What is the maturity, which one is the maturity periods of treasury bills? 184 days, 368 days, 270 days, 91 days. Can anyone answer this question? Let us discuss T-bill. T-bill means in a bond, it is a promissory note. What government will do? Government will release this into the market, because as it is released by government, many people are ready to buy as it is safe, right. So government now it is giving that you give us 1000 rupees now, in future we will give with some extra money. It is like a bond, but it has a fixed amount. Say for example, this is 1000 rupees bond and it will be auctioned by RBI. It will be auctioned by RBI in the market. So whoever buys at the highest price, 900, 950, it will be auctioned, and now they will buy it for 900, and in future they will gain the 100 rupees. This is released by the government to collect the money from the market, and this is given for 91 days, 182 days and 364 days. So these three are the maturity periods that are given by the government. So not 184, it is 182, 364, not 368, and then we don't have 270 at all. So 91 days is the answer. Correct, Rakesh, it is 91 days maturity period. So these are the features you can see. Three maturity periods are there. These are the maturity periods. It's like a bond. Their government is giving now, but after 3 months they will take back the bond and they will give you some extra money. That's all, right? And minimum amount now RBI is decided for 25,000. This also may be asked in the exam, right? So this is about the Treasury bill. Next question. This is a very analytical question. Think very common sense. You can answer this. This has been also asked in one of the exams. There has been a persistent deficit budget every year, year on year. That means government is taking extra debt. Deficit means government is taking extra money from the market. It is a debt, right? So which action or actions can be taken by the government to reduce this deficit? To reduce this deficit, what measures the government can take? Tell me. First one, enhance revenue expenditure. That means do expenditure, spend more money by the government. So will it reduce any deficit? Let's see. Introduce new welfare scheme. Bring on new welfare scheme and spend more money. So this is the second option. Third option, rationalizing subsidies. That means whatever subsidies you are giving, reduce them. Wherever required you keep, but whatever unnecessary things you reduce it. Then reduce import duty. That means whatever imports coming into India from USA, China, other countries, reduce the tax on it. What will happen if they reduce the tax? Government will have a less money. Now they are having more tax. If they reduce the custom duty, import duty, so that means there will be revenue loss for the government. So this is not correct. And revenue expenditure, if government increases, then again it will become deficit. Actually government has to save money, right? They should not do expenditure. It's like a daily activity. If you are in a debt, will you spend more? No, you cannot, right? You have to save money and reduce that debt. New welfare schemes, wrong. If they are launching new welfare scheme, they need to spend more. Rationalizing subsidies means reduce the subsidies wherever required, wherever possible, reduce the subsidies, right? So answer is C. Correct, Rakesh and Venkat. Very commonsensical question, right? Next, most popular question, goods and service tax in India was implemented from June 2018, July 2016, July 2017, June 2016. So what is the answer? You have to answer this, right? A very factual one, very popular one, and they will ask you this. It is from July 2017, right? So you can see the evolution of GST here. This is how we started discussion on GST in 2000. After that we have passed lot of discussions and then rejections, and finally it was implemented from 2017 July, right? So July 2017 we started implementing it, right? So this is the time scale. Correct. So some students have answered correct. Rakesh, Mahalakshmi, Tipaswami, Lakshmi Tipaswami. Very good. Next one, again a factual question. FRBM Act. So there was some issue here. Yeah. FRBM Act. FRBM means fiscal responsibility and budget management. Fiscal means government. Monetary means RBI. Fiscal Responsibility and Budget Management Act 2003 was introduced with the aim. For what purpose this act was introduced? They are asking. Promoting tax collection for the government. So the aim of this act is to collect more tax. To constrain the role of RBI in auctioning government securities. They are saying that RBI role in releasing government securities will be curtailed. That's why this act was put forward, they are saying. Improve the management of public funds. That means government funds. So improve it. Don't go for more debt. So maintain the proper one. So to improve the management of public funds, they have launched, they are saying. Merger of government banks. So this act was brought to merge the banks. So what is the answer? Fiscal responsibility means government responsibility. So there is a clue. If you know the full form itself, you can able to answer it. Fiscal responsibility means government responsibility. That means improve the management of public funds to maintain the government funds properly on expenditure revenue. So this act was bought. Right, Rakesh, very good. Answer is C. Next one, this is from budget, this year budget 2024. What is the revised estimate of fiscal deficit as percentage of GDP in budget 2023-24? Now understand what actually is a fiscal deficit. This term has been widely mentioned. You might have listened lot of times. Fiscal deficit means government will plan for, say for example, 100 rupees. For this year, they have said that we have got 100 rupees money, we are going to spend this. But this 100 rupees won't be sufficient for 1 year. Within 8 months, 9 months, government will complete the budget. So what they will do? They will take extra money from the market as a debt. So fiscal deficit is nothing but the extra money that has been taken by the government in that financial year, as it does not sufficient with their planned funds. So that extra money they have bought in that year is called as a fiscal deficit, and this fiscal deficit is always compared with the GDP. How much money you have bought as a debt in that 1 year compared to GDP, that is called as a fiscal deficit. So what is the percentage of this? So answer is 5.8. Venkat has answered. So you can see here, fiscal deficit of 2023-24, they have asked about the 2023-24 revised, right? So 5.8 is the answer, very important one, right? So to be remembered, that is about the fiscal deficit. So Venkat has answered this correct. Next one, this is also from budget. What is the highest source of revenue for the Indian government according to Union Budget 2024? So this year budget, they are asking that what is the highest contribution for the Indian government as a revenue? What is the highest source? Is it income tax? Is it GST? Is it corporate tax? Is it custom duty? Which one is the highest revenue for the government? Tell me. Let us see, before answering this, you can see the chart. This is given by the government itself. The total money received by the government per rupee, that means per 100 paise, 100% if you consider. So from where they are collecting more? Income tax 19%, GST 18%, corporate tax 17%. So these are the major contributors. Top 3 you can remember. So this is actually income tax, then followed by GST and corporate tax. So answer is income tax, A. Okay. So this is the highest revenue generated for the Indian government. Next, to which of the following ministries does highest amount was allocated in budget 2024? So we have a different ministries, and money allocation was done by the finance minister, and out of that, which ministry has got the more money? Tell me. Ministry of Railways, Ministry of Defence, Ministry of Health, Ministry of Housing and Urban Development. A very easy question. It is Ministry of Defence. Yes, Rakesh, you can see here, these are the top 3 sectors you can remember. First is Ministry of Defence, then Ministry of Road Transport and Highways, and then Ministry of Railways. These are the top 3 ministries. Correct. Ministry of Defence is the one, right? You have to remember budget. They will ask you at least 1 to 2 questions from the budget. Next, this is from money and banking. you have to understand the concept of repo rate. The decrease in repo rate by the central bank leads to, what is repo rate? This is important. Understand this repo rate. These are banks, this is RBI, right, and these are companies. These companies takes money from banks, right, money will get, banks will get money from savings by individuals or RBI. Banks will bring money from RBI. They will ask RBI that we will give you the government securities, you give money immediately, because we required a money to give for the private corporates. Now repo rate means the interest rate. Whenever you take loan, you take, say for example, house loan, you need to pay some interest to the bank. The same way, when banks are taking money from RBI, they need to pay interest to that money. So that is called as a repo rate. Say for example, repo rate is 4%. It means that whatever the money banks are taking from RBI, they need to pay to the 4% of interest to their money to the RBI. Now what RBI has done? RBI has decreased the repo rate. It means they have decreased the interest rate. Now you don't need to pay 4%, you just pay 2%. Now banks will rush to take the money. Why? Because they are paying, they need to pay very less amount of interest, so they take more money from RBI and then they give loans to the corporates with 4%, 5%, 6%, and then they earn money. So when there is a decrease in repo rate, what is the consequences they are saying? Increased costs on loans. Increased costs on loans. So if there is a decreased repo rate, is it increasing our cost on taking loans? No, it is becoming cheaper. They are becoming cheaper because RBI is demanding only less amount of interest. So this is wrong. Reduced expenditure by the public. No, actually when RBI is reducing the repo rate, that means there is more amount of money in the bank and more money with the corporates and more money with the individuals also, as they have released more money into the market. Whatever the money within RBI, it is not under the market. They are kept aside. They are not rotating in the market. But when there is a less repo rate, there is more amount of money available in the market, and then their spending expenditure of the public actually increases, right, because they have more money now. This is also wrong. Increased flow of money into the markets, a very direct one. This is how, whenever there is a less amount of interest taken by RBI, there is more money with the banks, so more money into the market. Correct. Rakesh has answered this correct. Answer is C. So repo rate is basically interest rate that need to pay by the banks to the RBI when they are taking money, right? Next, a very direct and easy question, very popular question again. Nationalization of banks took place in which year? Correct, Venkat. In which year? Yes, Mahalakshmi has also answered this correct. Now answer this question. Nationalization of banks in India took place in which year? 1983, 1969, 1973, 1991. See, briefly let us go back. Before certain, like answer is 1969. So before 1969, the banks were giving lot of loans to the private and agriculture. Poor people were in a back seat. All the banks were private banks. We don't have government banks. Only SBI was there. So that's why Mrs. Indira Gandhi, who was the Prime Minister then, thought that all the private banks, we will pay them money and we will take the ownership. We will nationalize. That means all the banks will become a mandatorily part of government, and then we will take care of the poor people and all. So that's why it was introduced in 1969. Correct, Venkat, Rakesh, Mahalakshmi, everyone have answered this correct. Next, NABARD, National Bank for Agriculture and Rural Development. NABARD was founded in July 1982. They have given the year also, but they are asking on the recommendation of which committee? NABARD was formed based on the recommendation of which committee, they are asking. Correct, ISRO also 1969, right. Narasimhan Committee, Gadgil Committee, Shivaraman Committee, Kasturi Rangan Committee. this is also popular question. See, all the questions that we are discussing are very basic level, right? As you are writing the technical examination, we did not take the questions from a very higher level, right? For other exams, it is like very high level we take, but these are all very simple ones which everyone has to know, right? Directly or indirectly, you will see these questions in many examination, right? So basics has to be done. Correct. So Tarun and Siri has answered this correct. Shivaraman committee and Narsimhan committee has requested to form RRBs, regional rural banks, right? So in 1974 they were formed. These are Narsimhan committee. Shivaraman committee is pointing to the NABARD, right? Gadgil committee is related to the third 5-year plan, and Kasturi Rangan committee is related to the education policy. Yes, Narsimhan committee also has related to the banking sector, other banking sector also, fine. Next, according to the classification of non-performing assets, as substandard asset is categorized as. So under the various non-performing assets, what is the time period for substandard asset? Before, let's discuss this briefly and then we will come back to the question. This is very important part. See, whenever you are taking loan, let's say you have taken some 1 lakh rupee loan from the bank, you need to pay every month interest as well as some part of principal, right? If you are paying regularly, they are called as a standard assets. If you are taking loan, right, from the bank and you are paying it regularly, they are standard assets, that means regular asset. If you are not paying your your loan that you have taken, principal and interest, if you are not if you have delayed by in between 1 to 90 days, that means October 1 is the deadline, but you did not pay on October 1. Next day you have crossed the limit. October 2nd you did not pay. So from first day till 90 days, they are called as the stressed assets. That means those are stressed for the bank as you are not paying regularly, right? And up to 1 to 30 days, if you are not paying your loan on time for 1 to 30 days, it is put under special mention account 0. If your payment delayed more than 31 days and 60 days, then this will be kept under special mention account 1. If you delayed up to 61 days to 90 days, then it will be kept under the special mention account. These are stressed assets. But if you cross the non-payment of loan time by 90 days, then they are part of the non-performing assets, right? If your non-payment cross 90 days, then only they are part of non-performing assets, else they are part of stressed assets, right here, stressed assets. Now within non-performing assets, we have up to more than 91 days and up to 1 year, that is 12 months, they are called as a substandard asset. And if it crosses more than 1 year, they feel like this is doubtful now, they are not going to pay our asset, loan that has been taken, then they are kept under doubtful asset. And finally, if they are not able to recover, so they think that this guy will not going to pay anymore, so this is kept under the loss asset. Now they are asking, NABARD is 1982, Siri, it is NABARD is 1982, not the 1948. Now come to the question. So they are asking, according to the classification of non-performing assets, substandard asset is categorized with when it is AGs. At what time they are categorized substandard? 12 to 24 months, less than 6 months, less than 12 months, more than 2 years. We have just discussed this substandard asset, you have to answer it. Correct, it is less than 12 months. So this is what we have discussed, right? So less than 12 months and more than 91 days. So substandard asset means less than 12 months, right? So this is about the question. C is correct, Rakesh and Mahalakshmi. Next question, very easy question, direct question. Which of the following is not included in the assets of a commercial bank? We are seeing the banking sector questions, right? We have completed national income accounting and then we have completed budget. We have now entered into the money and banking sector, right? So which is not included in the assets of the commercial bank? What are the assets for the banks? Whatever the money they own, those are assets, and whatever that banks has to pay back to someone else, then they are the liabilities, right? Now they are asking which are not included in assets, right? Advances, that means loans. Advances are nothing but loans. Loans given by banks to someone else is assets of them, their own money. They are collecting extra interest also, right? So advances or loans which are given by banks to someone else is an asset of the bank, because they are getting money in the future including the interest. So it is an asset. So this is incorrect. Investments, whatever the investments that banks has made, say for example they have made investment in road sector, they are going to get the returns, share of the profit. So this is also. Then deposits, whatever the money that you are depositing in a bank, you have saved some 10,000 rupees, it is not asset of a bank, it is a liability, they need to pay back to you. It is an asset for you but not for the bank. So deposits is the not part of asset, it is a liability, they need to pay back. So this is the answer, right? Money at call and short notice means the money that a bank, say SBI, has bought money from someone else bank, ICICI. For example, ICICI has immediate money. One person has saved 100 crores in it and immediately he came that I required 100 crores immediately. So ICICI does not have money. So what they will do, they will come and they will ask for SBI. So this money which was given to ICICI by SBI, this is a asset. They are giving, SBI is giving money to the ICICI for a one day, 2 days, right? So that is a asset only. So basically these three are assets and deposits are liabilities. So answer is B. I don't know, most of you have answered this wrong. Loans, advances is assets of the bank. I hope you are you understood now. Let me know if this is clear or not. Why I am asking? Because most of you have answered this wrong. Is this clear? Money at call short notice is the money given by one bank to other bank. They will charge some interest also. See, this is SBI, this is ICICI. So basically call money or money, call on money is nothing but the money given by SBI to ICICI for one day. They will charge some 1%, 2% interest. So 100 crores they have given and they are charging 1%. That means extra 1 crore they are collecting. So it is an asset for SBI. Okay, deposits. Great. Next one, let's move to the 5-year plans now. The main objective of 12th 5-year plan is, what is the objective of 12th 5-year plan? Inclusive growth and poverty reduction, inclusive and sustainable growth, sustainable and inclusive growth to reduce unemployment, faster, sustainable and more inclusive growth. Correct, Siri. Yes, you are correct. Yes, I hope it is clear, right. From 5-year plans you can expect a question. There is no concept also, it is just factual ones. So what is the theme of the objective of the 12th 5-year plan? This is a very direct one, you must have studied in 5-year plans, that is faster, sustainable and more inclusive growth. D is the answer. Okay, this is the theme. Faster is also very important, right. Next, which program given the slogan Garibi Hatao? Correct, Rakesh. Yes. Which program, which 5-year plan has given the slogan Garibi Hatao? Seventh 5-year plan, third 5-year plan, sixth 5-year plan and fifth 5-year plan. This is also very direct popular question. Answer is D. That is, when Mrs. Indira Gandhi was the Prime Minister, she has given the slogan Garibi Hatao, right. So option D is the answer, fifth 5-year plan, correct. So most of you have answered. So I am just giving you the quick revision, so you can expect a question from it. So please, you can screenshot it and you can by heart, keep this and you can by heart. These are all the main elements of the 12 5-year plans. It is like a quick revision. So whatever the elements that we are focusing specifically, so all these are part of Years also you need to remember when the 5-year plans was there and what is the main theme also. So, you can just quickly revise this, fine. You can take screenshot and you can revise. Next very easy question, a very popular one, no required of any discussion also. Planning Commission was replaced by NITI Aayog, National Integration Council, Finance Commission, SEBI. So, very direct and easy question, NITI Aayog. Next, now for 5 to 6 questions we will see from railways. We are done with planning also, we are done with the banking also. Now, let us move to correct. So, this is very easy question, I know everyone will answer, NITI Aayog, right. So, now let us see some 5-6 questions from railways. So, there is a possibility of question as you are writing the railway examination. Okay. Which of the following segments contributes the highest revenue to Indian Railways? Passenger services, freight, that means goods, catering services, tourism services. Not tourism, not catering, so there may be confusion here. The freight services, whatever the goods that is being carried by the railways, they are giving the more revenue to the railways, right. So, answer is B. Next question, what is the largest source of expenditure for Indian Railways? Now, we have seen the revenue, now let us see the expenditure. This is in terms of rupees, freight services in terms of crores, this is contributing more than 30%, passenger is just around 29% something. So, 49 and it is just 29. So, actually from goods transport, the goods carrier that they are doing itself is actually the highest revenue for the government. Now, expenditure, staff salaries and pensions, infrastructure development, fuel costs, equipment maintenance. Freight means goods, Siri, like you might have seen the goods train, right, which carries lot of vehicles, oil, lot of things they carry, right. So, when the goods carrier is traveling, so they carry lot of goods, many manufacturing and very high amount of coal as well, many products, right. So, this is called as a freight. Freight means basically goods. Now, in terms of expenditure, it is staff salaries and pensions, right. Staff salaries and pensions is the largest source of expenditure. Very again direct question, correct. So, Venkat Mahalakshmi has answered this correct, staff salaries and pensions. Next, what is the primary purpose of dedicated freight corridors initiated by Indian Railways? What is the primary purpose of dedicated freight corridors initiated by Indian Railways? To increase tourism, to segregate freight and passenger traffic, right, tariff, not tariff, it is traffic, to promote high speed trains, to expand international routes. So, what is this? So, whatever the railway related things we are discussing, there is a possible question. So, it is to segregate freight and passenger traffic. So, as you might have travelled lot of times in the trains, whenever there is a main train, they will keep the goods train aside and then it will be delayed in terms of delivery. So, that is why now to improve the separate traffic for the freight and passengers, they have created the dedicated freight corridor, right. So, we will see there are 2 dedicated freight corridors. So, basically dedicated freight corridor means a railway line that is exclusively laid for the transport of goods, exclusive. There in that railway line there will not be any passengers train, it is exclusively for the goods transport itself, right. So, in this we have 2 dedicated freight corridors, Eastern Dedicated Freight Corridor and Western Dedicated Freight Corridor. Eastern Dedicated Freight Corridor covers from Punjab, right? So, Ludhiana in Punjab to Dankuni in West Bengal. So, from Ludhiana in Punjab to Dankuni in West Bengal. So, this is the Eastern Dedicated Freight Corridor because it is part of Eastern India, and this length is 1337 kilometers, and it passes through West Bengal and then Punjab, Haryana, UP, Bihar, right. Next we have Western Dedicated Freight Corridor, west side. So, this is connecting from Dadri, right, in UP, Dadri is in UP, till JNPT port, Mumbai port. So, this is the Western Dedicated Freight Corridor, and this length is 1506 kilometers, 15 knots. So, it is lengthier than the Eastern Dedicated Freight Corridor. It passes through Rajasthan, Gujarat, Maharashtra, Uttar Pradesh and Haryana, right. And this Dedicated Freight Corridor Corporation of India was established in 2006 to implement this. So, this organization is implementing Eastern and Western Dedicated Freight Corridor under Ministry of Railways. So, total together length is 3306, right. And World Bank is funding the Eastern Dedicated Freight Corridor, and Japanese International Cooperation Agency is funding the Western Dedicated Freight Corridor. So, all these facts are important. The total investment in these two corridors is 81,000 crores. Railway zones we will discuss, Mahalakshmi. There is one question also. Next, among the railways itself, there is one more question. What does the term mission raftar refers to in the context of Indian Railways? In the context of Indian Railways, what is mission raftar? Modernization of railway station, increasing the speed of trains, expanding the rural rail connectivity, digital ticketing initiatives. So, tell me, what is the answer for this? The answer is increasing the speed of trains. So, answer is B. See, all the railways related you have to go through. Whatever the general studies components, they will ask you at least 3-4 questions from the railway specifically. So, you have to go through the current affairs related to the railways and the static part, railway zones, headquarters, all the things you have to go through, right. So, answer is B. You can see quickly, Mission Raftar is a Indian railway project which was launched in the budget 2016-17, and the main aim is to increase the speed, to reduce the travel time, increase the speed, right. So, increase the average speed of freight trains by double. So, whatever the goods trains that are transporting is just 30-40 kilometers per hour, now they want to double it, right. Increase the average speed of super fast postal and express trains by 25 kilometers. So, whatever 70 is there, 95 we will make, 60, 85. So, 25 kilometers per hour we will add, and all these things will be done, flyovers, all these things to increase the speed. So, answer is B. Next one, where is the headquarters of Northeast Railways located? Answer, this is the most popular question. They will ask you at least one question will be there. Headquarters and of the any railway zone. They are asking about the Northeastern Railway, headquarters of Northeastern Railway. Gorakhpur, Lucknow, Guwahati, Patna. Northeast Railway headquarters. So, answer is Gorakhpur. Northeast Frontier Railways, it is of the this one Guwahati, but Northeast Railways it is Gorakhpur, right. So, these are the headquarters. You can just screenshot it and you can see this: Central Mumbai, Eastern Kolkata, East Central Hijapur. So, here we have discussed about which one? Gorakhpur, Northeastern. whereas northeast frontier it is Guwahati at near Maligaon. So this you can expect a question. Right. So these are some of the important ones. So you can remember. So total 1, 2, 3, 4. So again 4, 8 and then 12, 16. So 2 more railway zones were added, right, South Coastal Railway. So this been still upgradation. As of now we have 18 ones. So this is a little bit older pick from NCERT. Okay. So this you have to know, you can screenshot it and you can remember. Next, last few questions. In the context of balance of payments, which of the following forms part of capital account? Now we are done with railway, so just 3-4 few questions are there, right. So in this, see, India trade with all other countries, USA, China, right, Pakistan, all the countries, 200 countries are there, and India does trade with different countries, and whatever less than 1 year whatever we exchange, those falls under the current account less than 1 year, and if it is more than 1 year transactions are there, those falls under the capital account, right. So imports, exports, everything. So which of the following forms part of capital account? Capital account means more than 1 year. Remittances mean money sent by the Indian citizens to India, their parents. So this is a less than 1 year only. So this is not a part of capital account, this is a current account. Then imports of goods and services, both are within 1 year, whatever the goods within 1 year. Foreign investments made by the companies, they are not made for 1 year, 10 years, 20 years also it was made. So this is the capital account. So C is the answer. You can see here. So this is the exchange, current account, capital account, and these are the things, right. So this also you can remember. Next one, GDP calculation we have already seen in the starting of the same question. Next, consider the following statements related to the inflation. There is one question related to the inflation, right. Remittances, India is at top. So last 2-3 questions are there. It is inflation related one. Inflation benefits debtors. Debtors means who has taken money from someone else. Inflation benefits bond holders. That means who has purchased the bonds, right. Let us say this is the bond and this is January 1, 2024. This is a company A. This is a person who has purchased this on January 2024. This person B has purchased from person A, right. So he is the bond holder who is purchasing the bond. He is the debtor, that means debtors means who is giving bond now and then they are taking money. This guy has given 10,000 rupees and they have taken the bond. So he is the debtor and he is the one who has given the money. So he will get in 2025 January 1, he will get bond with interest. So now because of inflation means increase in prices. So as this person has given the money and he is going to get without inflation, he is not going to get the inflation 4%, 6%, he is going to get whatever the promised one. So he is at a negative case. So he is not benefiting from inflation because he is not going to get money, but this guy is not going to pay inflation, he is going to pay only the normal money. So basically this benefits, inflation benefits the bondholders, wrong, but debtors, yes, who is taking money now it will benefit. So answer is 1 only, correct. Next, which of the following has occurred India after liberalization of economic policies in 1991? So after taking liberalization, that means LPG reforms in 1991 under PV Narasimha Rao leadership, what has happened? What is the consequences after 1991 liberalization? Share of agriculture in GDP has increased enormously. They are saying that agriculture contribution has increased. Share of Indian exports in the world trade increased. So exports from India has increased. FDI inflows increased. So investments from other countries to India has increased. India's foreign exchange reserves has increased enormously. That means whatever the dollars and then gold, euros, whatever we are storing it, it has increased. Okay, so what is the answer for this? Let's solve. Share of agriculture in GDP does not increase. From 40% to it has now 17%. So it has decreased. So one can be eliminated. Share of India's exports in the world trade increased. Yes, as we have opened up, our goods went for other countries and it has increased. So 2 should be there. And FDI flows also increased, right? So we have got lot of investment from other countries. So this is also correct. India's foreign exchange reserves also increased. As we have opened up, lot of dollars and all where we were able to solve. So answer is B. Very good. Siri and Venkat has answered this correct. Next, disguised unemployment generally means. What is the meaning of disguised unemployment? This is the agriculture field of 2 hectares and the productivity of this is 100 tons. Let us say 100 tons of rice it can cultivate, and the requirement for this is 50 employees. So 50 people are sufficient. But now there are 100 employees who are working in this field, right? So the extra employees, even if there is extra employees, there is no increase in productivity. It is just a maximum productivity is 100 tons and that can be done with 50. But now there are 100 people. So extra 50 are called as the disguised unemployment. So that is the marginal productivity is 0. That means any extra addition of labor will not give any extra productivity. So answer is C. So these are different types of unemployment. Frictional means when a person is shifting from one job to other job, so he will have a temporary unemployment. Disguised unemployment we have discussed. Structural means any structural change in economy. In 1991 reforms we have opened up. Earlier it was government, now it is private players. So this structural change has happened. Then cyclical unemployment means during COVID we have seen the slump in economy, and then so economy also runs in cycles. So that's why during that slumped place there will be some unemployment, that is called as a cyclical. And seasonal unemployment means during certain seasons there won't be employment. For example, take construction workers. During monsoon when there is a rainfall there won't be employment for them. So during some seasons they will see the unemployment. Fine. So that is the thing. It is not like that, Siri. Some months it is a seasonal unemployment. Disguised means extra people are working than required. So that is called as the disguised unemployment. Okay. So let us see next question. The famous Marrakesh Agreement is related to what? World Trade Organization, World Intellectual Property Organization, World Economic Forum, World Bank. So last 2 questions we have, we will discuss this and we will end. Marrakesh Agreement is related to the World Trade Organization. So World Trade Organization was established through Marrakesh. Marrakesh is a place in the a country in the Africa. So through Marrakesh Agreement we have established the World Trade Organization. So very popular one, right? Yes, so correct. So this World Trade Organization you might be aware. Next we have, so multidimensional, this is also not required for you, this much detailed statement based they are not asking for you in the exam. Yes, this is a current affairs question. Let us see this question. Arrange the following countries with regard to their stock markets from largest to smallest. This is a factual question. So stock markets they are asking from large to small. Which one is large out of this? So this is a current affairs. Recently India has crossed Japan, right? So first is USA, the topmost, then we have China, then we have Japan. See, India has not crossed Japan, sorry, it is Singapore, right? Then we have India. So first is USA, so 2 should be there, so that means you can eliminate. and then China 2, 4, then we have Japan at 3. So answer is C, and India is at 4th, right. So you can see here, this is the recent one. India overtook Hong Kong, sorry, it is not Singapore, it is Hong Kong, and become world's 4th largest stock market. USA, China, Japan and India. You no need to worry about remembering the numbers for your exam, they won't ask you in detail. Just remember India is at the 4th rank now. So this is also statement based questions, they are not asking, I have added because to make you think. This question just briefly see it because it is important. 16th Finance Commission was recently constituted. So out of that, which statements are correct, they are saying. It was constituted by President of India according to the Article 281 of the Constitution. They are not going to ask you statement based, but know the facts about this, right. The government has appointed N.K. Singh as the chairman of 16th Finance Commission, they are saying. 16th Finance Commission recommendation would come into picture from April 1, 2026. The commission work involves redressing the vertical, that means distribution of funds between center and state. So out of these 4 statements, there is one statement which is incorrect. Can anyone answer this? Out of these 4 statements, there is a one incorrect. So they are asking which are correct. So that is one statement is incorrect. That is this one, N.K. Singh. Arvind Panagaria is the chairman of 16th Finance Commission. Okay, rest of the correct. This was constituted by the president under Article 281, 280 provision 1, and this recommendation will start from 2026 April 1, and this is aim is to devolve the funds between center and states. So here N.K. Singh is the chairman of the 15th Finance Commission, but 16th Finance Commission it is Arvind Panagaria. Okay, so answer here is 1 to 4 A. Okay, D is 1, 3, 4. Answer is D. Okay. So this is the screenshot recently in news. So that's why there is a possibility of question. Now, which of the following statements related to domestic systematically important banks? There are certain banks recognized by RBI, they are considered as the most important. If these banks collapse, then everything economy will collapse. So that's why they are asking, these are called as the domestically systematically important banks. Now out of this, which statement is incorrect? Out of the 4 statements, which are incorrect? These are the banks systematically important due to their size and cross jurisdiction activities. So because of their size it is important. They are declared by Bank of International Settlements? No, that is RBI. It is declared by RBI. They are declared based on the Basel Committee on Banking Supervision. So Basel International Bank for Settlement is there, Bank of International Settlement. There are certain conditions. According to these conditions they are declared, but this is declared not by Bank of International Settlement but RBI, and as of now only 3 banks are there, SBI, HDFC and ICICI. So only 3 banks are there. So wrong statement is B, they are declared by RBI. Fine. So this is the thing. Next, which of the following countries topped in the Human Development Index report 2023-24? Which of the following countries topped Human Development Index report? Denmark, Switzerland, USA, Bhutan. Correct, Mahalakshmi, it's B, correct answer. So let's see, a Human Development Index is released by UNDP and they consider life expectancy at birth, expected of schooling years. So basically health, knowledge and living standard. So these are the indicators. So these are the top ones: Singapore, Norway, Iceland. At least 3 you remember, that will be sufficient. Switzerland, Norway, Iceland, right. So out of this, which one is the top one? That is Switzerland. Very good, some people have answered. Next, Project Gaia, recently released by Bank for International Settlement. This is a Switzerland based bank. So this project was recently launched. So what is the purpose of this project, Project Gaia? To estimate the impact of COVID-19 on global economy, to facilitate analysis of climate related risks in the financial system, to promote the particular participation of MSME sector in the service sector, to evaluate the role of artificial intelligence in manufacturing sector. So this is a very factual one, you might be aware or you might be not aware, now no. So answer is B, to facilitate analysis of climate related risk on the financial systems. So answer is B. Very good, Venkat. Next, recently Vocal for Local initiative to promote grassroots entrepreneurship and self-reliance was launched by, these are current affairs based economy. So who has launched this Vocal for Local? That means to promote the local goods, Indian goods. So this was released by NITI Aayog. Next one, what is the following major objective of asset reconstruction companies? So they are asking the asset reconstruction companies objective. So why these asset reconstruction companies were launched? Very direct question, to recover the non-performing assets, right? Whatever the banks that has been given as a loans, to reconstruct, to collect them back. So this is the specific companies, they will buy this NPAs and then they will sell it off. They will take care of collecting those back, right? So basically this is the answer, to reduce and manage the non-performing assets. So direct question. Last question for today, which of the following industries are among the 8 core industries? 8 core industries. So let's quickly do this. We have lot of industries in India. Out of that, 8 industries are the major contributor for industrial growth. 40% of the total industry is given by these industries itself, right? Petroleum, electricity, steel, coal, crude oil, natural gas, cement and fertilizers. And out of this, they are asking which are those ones. Out of these 8, which are given here are core industries. Cement yes, fertilizers, shipping wrong, refinery yes, textiles wrong. So 1, 2 and 4 is the answer, right? So answer is A. So that is all for today's session. I hope you have enjoyed the session. If you have, please do like and share our videos and keep subscribing. We will come up with lot of videos. Thank you.